to take our first look at payroll. Now, work patterns have changed over the years, and one of those changes has been that an increasing number of people now work for others, who are called the employers. They are paid a wage or a salary. These sessions look at how that wage is made up and the deductions that are made from earnings before the employee receives a paycheck. Any payment made to an employee is a transaction that has to be recorded in the accounts. Any deduction made on behalf of other bodies, such as the federal government, also has to be recorded in the accounts. Consider the steps that are carried out in accounting to determine the size of the paycheck. The first is to determine how much each employee has earned, whether this is through the hours worked, a figure based on an annual salary, or according to the output in terms of goods. The second step is to make the calculations for those elements that will be deducted from earnings. The last step, to subtract the sum of the deductions from the amount earned to arrive at the figure which will be paid to the employee. The results for all the employees will then be entered to the accounts. The records for each individual are kept separately from the main accounts, usually stored as data by a payroll program. Paying employees is a cost of running a business, so the wages and salaries will be recorded in an expense account. The first issue to be determined is whether a person is actually employed or whether they are merely contracting a service to the company. Two terms that are frequently used in payroll are wages and salary. Very often they seem to be used as if they meant the same thing. In general, accountants do give different meaning to the terms. A salary is normally an amount that is paid annually, the payments being made in 12 equal parts or in 26 equal parts, depending on whether the employee is paid monthly or fortnightly. Increases in remuneration are usually expressed as an annual figure or a percentage. If an employee is contracted to work for a certain number of hours each week, and the amount they are paid is expressed as a figure per hour, then they are usually referred to as waged employees. These employees are usually paid either weekly or fortnightly. There are also employees who are paid according to the number of pieces of work that they complete. These employees are referred to as piece workers. In many countries, the government has passed legislation which determines the minimum amount that an employee can be paid per hour. This is referred to as a minimum wage. It can still apply to salaried staff where contracts may actually express a figure for the number of contracted hours per year. Other legislation determines the number of hours that an employee can be required to work each week. An employee may choose to work additional hours, which are referred to as overtime, where there is also a minimum amount which they must be paid. In practice, employers will often pay higher amounts depending on the time of the year and the need to complete the work. So when is a person an employee and when are they to be classed as a contractor? The distinction is not always clear. If a person claims to be providing a service and also has a number of other clients, such as a lawyer, then they may be regarded as contractors providing a service. On the other hand, if a person is providing a service to only one client, then the distinction is not clear. They are more likely to be regarded as employees. The total amount that an employee earns is called a gross wage. For wages, employees, the first requirement for an employer is to be able to record the time worked during each pay period. In days past, this was once done by using a card that was punched with the time. This gave rise to those old terms clocking in and clocking out. Where employees work on site, they may be required to report to an office before commencing work so that timesheets can be kept. New technology has also led to other methods being used. Cards with barcodes that are unique to each employee can be used, as can plastic cards with magnetic strips inserted. Gross pay will be made up of normal pay, any overtime earned and any additional payments. Additional payments may include bonuses and other incentives offered to employees. However, for most employees, the reimbursement of expenses will not be considered as a part of earnings. For a salaried employee, the annual salary is divided by the number of pay periods to determine gross pay. Once gross pay is determined for the pay period, then the deductions that apply to that pay period will be calculated. The deductions can be classed according to type. Broadly speaking, there are three groups of deductions. Income tax is usually the main deduction. Federal income tax will be deducted from the earnings of all those who earn above a certain amount. Now, according to where an employee lives and works, there may be other taxes. In Florida, residents who work in Florida are only subject to a federal income tax. The second group of deductions are those that relate to certain benefits. Collectively, they are referred to as FICA deductions. The third group of deductions are technically voluntary deductions, even though most employees elect to have some of these deductions made. The amount of income tax deducted is not the same for each employee, but will depend on a number of factors, including how much the individual has earned. Other important factors include your marital status and the number of dependents that are being claimed. The number of withholdings will allow an individual to have a portion of their income exempt from tax. This means that tax is then only calculated and deducted from the remaining income. Often, a married couple will choose to each keep a withholding. However, if one partner is not working, then the other may claim two withholdings. There are still some small firms with very few employees who will make use of a series of tables to determine how much income tax is deducted. However, most firms will use payroll software where these calculations are made by the program. Such programs usually need to be updated each year to allow for any changes in legislation. The insurance contributions for Social Security and for health benefits are percentages of earnings. Again, these are usually calculated automatically by payroll software. The remaining voluntary deductions may be made for a variety of reasons. The most important are those that are made where an employee elects to have health insurance and pension scheme deductions. After all the deductions are made, then the remaining amount is net pay, and this is what the employee will actually receive, net pay. Many employees no longer receive a physical paycheck, and even fewer are actually paid with cash. Most employees receive their earnings through electronic funds transfer, so the monies are paid directly into a bank account. Employers prefer such methods because they reduce the risk of fraud. Employees often prefer this method because it means they do not have to go to a bank each pay period to pay in a cheque. This is the end of the first session on payroll. Thank you for listening and for watching.